Buyers that put less than a 20% down payment towards the purchase of a home pay private mortgage insurance. I'm Rami Dhillon, and I'm a real estate agent with Realty ONE Group Southwest in Temecula, California, and today's video covers what is PMI, or what is known as private mortgage insurance. PMI is usually required when you have a conventional loan and your down payment is less than 20% of the purchase price of the home. It's a type of insurance that protects the lender, not you the buyer, just in case you stop making payments on your mortgage and your house forecloses. So the mortgage insurance that you've paid into will cover all or part of the remaining loan balance. So why would you as a buyer want a loan with this extra cost? One big reason is that you can buy a home sooner rather than later. You don't have to save for a 20% down payment, but this makes you a riskier buyer for the lender, so you end up paying this extra cost or insurance. Typically, PMI can cost anywhere from about 0.5% to 1% of the loan amount, but it can vary and it can end up costing you a little bit more depending on certain factors that can make you a riskier borrower to the lender, like for example if you had a lower credit score. But so the advantage of having PMI is that you can purchase a home with a much smaller down payment instead of having to pay the traditional 20% which is required in a conventional loan. The disadvantage, of course, is that your monthly payment will increase and quite possibly your closing costs as well. So you're going to have to weigh your options and see which one you feel more comfortable with. On one hand, you're going to have a larger down payment but no PMI. On the other hand, you're going to have a considerably smaller down payment but you'll have a larger monthly housing expense. Now, one thing you should remember is that PMI is not forever. You can actually get rid of PMI once you have 20% equity in your home, meaning that your loan balance is less than 80% of the appraised value of your home. So for example, if you have a loan amount of $80,000 and the appraised value of your home is $100,000, that means you have 20% equity in your home. Contact your lender to find out what their procedure is for eliminating PMI. You will have to send a request in writing to your lender. Now, even if you never ask your lender to cancel PMI, the lender is still required to automatically cancel PMI once your loan balance reaches 78% of the original value of your home. But you still need to be current on your mortgage payments in order for that to happen. Finally, you need to decide for yourself if PMI makes sense for you. PMI adds to your monthly mortgage expenses, but it helps you in buying your very first home without a lot of cash out of pocket. So no matter whichever way you decide to go, be sure to research your options and make an educated and informed decision. If you like this video, please hit the thumbs up button, share it with your friends, and subscribe to my channel. I will be bringing to you videos once a week on everything about real estate and how you can accomplish your real estate goals and dreams. Thank you for watching, and I'll see you on the next video.